Hello guys, my name is Joseph Hull. Today I'm going to be talking to you guys about mortgage protection life insurance. A little bit about my background. I've been in the insurance industry now for over 30 years. I've helped thousands of families to be able to protect themselves and their families in the event of an unexpected death, a disability, and critical illness. I've helped them to use all types of life insurance and to be able to pick policies that fit the goals that they have in mind and fit the pocketbooks. So whatever they can afford and helping them to accomplish what they want to accomplish. I've been able to do that successfully. Today I'm going to focus on some key points regarding what mortgage protection is. Now, first and foremost, you need to understand it is life insurance. Mortgage protection is a concept. It's just a specific way that a person decides they want to use the life insurance so they can focus specifically with the mortgage in mind. So let's just take an example. Let's say someone has a $300,000 mortgage, and if something happens to a breadwinner, then that may pose a problem for remaining family members to be able to pay the mortgage and to or to be able to sell the house in a way that is comfortable for them. In a sense, the market sometimes is not favorable. So being able to wait until more favorable conditions to be able to sell a home may be important. So you may need money for that, or if the home needs repair, the money it may take to repair the home. So all types of things can happen when a loved one passes away, and with a home it can be a financially devastating issue. So in order to prevent the family from having to lose a home that they may have paid into for years and years, then life insurance properly structured to protect the mortgage can be a very important tool to have, right? So the most common way the mortgage protection life insurance is sold is utilizing what's called term life insurance. Term life insurance is what's considered to be pure insurance. There's no cash accumulation in the policy. It's just pure protection, just pure life insurance. The reason it is used so much is because it's the cheapest way to purchase life insurance, and because mortgages, you're talking usually hundreds of thousands of dollars of life insurance, then you know, how do you afford to pay for that? Not everybody's going to be able to afford whole life insurance policies, and because they can get more expensive. So the term insurance is a great way for someone to keep their costs down while having adequate protection to protect the mortgage in the event of something happening. Now, today, the policies that we offer not only provide a death benefit, but a lot of my companies that I use offer what's called living benefits. What that means, in effect, is that in the event of something critical occurring, like a heart attack, a stroke, a cancer, they can accelerate the death benefit. And acceleration means that you can use the death benefit without having to die to use it. That can be very important because people lose their home sometimes, not necessarily because of death, but because they have some sort of a health setback, and it may not work for a stretch of time. And once the savings runs out, or there's not disability insurance, or it's just not paying them enough, it could really put them in a difficult position trying to maintain the home. So these policies can be, with living benefits, could be another way that they can protect their home from being lost. These are important things. When you pay for a home, you can pay into these homes for years. And if you have any kind of an unexpected financial downturn or setback, you can still wind up losing that home back to the bank. So that's not a good thing. So these policies can be very valuable. Going back to living benefits, another key aspect of these policies is they offer what's called a chronic illness rider too. What that means is that in the event the person needs substantial help, meaning there's 6 activities a day to living: the ability to be able to clean yourself, clothe yourself, bathe yourself, transfer yourself, continence, and feeding yourself. It's 6 of them. If you can't do 2 out of the 6, if you have a company that offers these living benefits, then they will allow you to, again, accelerate that death benefit if something like that was to occur to you. Again, this is another fantastic benefit just in case something like that occurs, so that you can, again, protect your home. So as far as costs go, again, term insurance is going to be the cheapest way to do it, and especially when you're talking about hundreds of thousands of dollars potentially needed for a mortgage. That is the simplicity of it. Mortgage protection is a concept. It's usually not a specific policy. It's in a sense of like, oh, this is a mortgage protection insurance policy. No, you take term insurance usually and utilize it to target or focus in on the mortgage so that it's adequate to be able to either pay the house off or get as close to it as possible so the family can live there comfortably. Or even if they don't want to pay it off, then it gives them enough money to be able to take their time, do whatever repairs is necessary, and then sell it if that's what they want to do, rent it out. You get the picture. So fundamentally, that's what mortgage protection insurance is. If you guys want more information, you can contact me through phone. You can call me at 708-705-7783. You can go to our website at blackapplegroup.com. Definitely please subscribe. I'm going to be doing a lot of these videos. The whole point of the videos is education and information that you can actually use. Through YouTube, you can do it anytime you want to and watch the videos as many times as you need to. So yeah, and I'm on Facebook, we're on Twitter, and a lot of the other social media lines. So reach out to me, and I'll look forward to helping you any way I can. Thank you.